So I reread Ron Paul's and the Fed before the interview, because I want to have like a refresher in my mind. And in Jeff Booth's book, The Price of Tomorrow, so he explains that technology is a deflationary. It has deflationary effects on the economy, and as technology makes things cheaper, and the Federal Reserve should stop trying to fight technology, because they're trying to they have a mandate of rising prices and inflation. And he says that technology is actually the free market making things cheaper, but the Federal Reserve is trying to make things more expensive. So instead of trying to centrally plan, the Federal Reserve should just stop trying to fight falling prices caused by advancements in technology and innovation. And in Ron Paul's book and the Fed, he says that when you look at the last quarter of the 20th century, there was an increased purchasing power accompanied by one of the greatest periods of economic growth in history. He said the last quarter of the 20th century is also when we went off the gold standard. So thinking about it in those terms, where in the last quarter of the 20th century, we went off the gold standard, we had an increase in purchasing power and an increase of technology that made things cheaper. Do you think that, because now, I mean, if you fast forward to now, 2020, do you think that the explosion of capitalism and like the effects of technology and the economic growth that we've been seeing up until the COVID crash, right? Do you think it's due to the deflationary effects of technology, or going off the gold standard, or is it something else?
Well, I don't think it's imputable to going off the gold standard.
Because that's what some critics will say. They'll say, because when you bring up in say like people that are progressive politics, or they're on the left, really hard left, like they're advocating modern monetary theory or UBI or something like that, and you say, well, we should move back to like an Austrian style hard money system that's constrains the power of government to redistribute wealth so willy-nilly. They'll always say to you, well, look at going off the gold standard, we had the biggest boom and lift in prices and asset prices, and it seems to be that going off the gold standard was a good thing for the economy, because look how much it grew in the last century.
Well, yeah, but there's a difference between real terms and monetary terms. Prices can increase in monetary terms, but they're not increasing in real terms. All right. You go back to the turn of the 20th century, and the Austrians will point out what was happening. You had, I hate to use the word deflationary. It wasn't deflation. It was appreciation. It was appreciation of gold and silver currency. And what was this doing? This was raising the real value of workers' income without the workers necessarily doing anything about it. Simultaneously, there was an increase in technology, which was also raising the real value of workers' income in the sense that they could get better products at cheaper cost, all right? And this was a period in which there was the only inflation in the system. This was before the Federal Reserve. The only inflation in the system was more gold and silver that was being coined, and that was a limited amount because the market controlled it. And the amount of currency that could be put out by the national banks, and this was limited by the amount of debt that the Treasury was willing to incur, which was low because there was an anti-debt policy following the Civil War before World War I. So you had a terrific increase in the relative wealth of the United States versus Europe. And this was the takeoff point for the United States becoming a dominant economic power in the world. What would happen today? Now, today the technological advances would be what, order of magnitude or more greater than they were at the turn of the 20th century?
Right.
I mean, think, you
I
figure
would
whatever
say.
number you want. It's a large number, all
Yeah.
right? The gold and silver economy would be still constrained. I guess we have more gold and silver now than we had then, but the increase in gold and silver would still be constrained by the costs of mining, refining, and minting, and so forth and so on. So you'd have an appreciation in the value of the coinage of the money system, and you'd have an increase in technological development, and therefore those people in the lower half of the economy whose standard of living was dependent upon wages or returns from investment in productive companies, it would be going up, right?
Yeah, I'd imagine.
That seems like the logical conclusion of this, and it would be going up at a faster rate than it was going up at the turn of the 20th century, simply because technology is advancing that much more quickly. If you make the assumption that technology is one of the drivers of this, all right, which I'm willing to accept, having been a scientist for many years. So I would look at this and say, all right, so there's another advantage of going to the gold and silver system. Not only do we constrain the government and stop the government from wasting, stop the government from engaging in unconstitutional actions through bribery, but we influence the ability of the market system to increase the well-being of the lower half or the lower 2/3 of the economy, and probably more than anything else, the lower 10 or 15% of the economy. Right? Those people whose incomes, whose wealth is entirely dependent upon wages. They have nothing else. They have no investments.
Mm-hmm.
Right? Their welfare is dependent on how much money do I get per week, how much money do I get per month, right? And what those people would want to see is appreciating value of the money they get and increasing technological advances so that the money that they get can buy more advanced and better products. And that's why the union movement in this country, before it went socialist, when it was people like Samuel Gompers who were leading it, the AFL, the original AFL, the union movement, if you read their literature at the turn of the 20th century, late 1800s into the early 20th century, they were perhaps the biggest proponents of a sound currency system, a gold and silver currency system, because they understood that. They understood that the average working man was dependent for his welfare upon stable money, and even better, appreciating money. They didn't want inflationary economic policies because this worked directly to their disadvantage.
Well,
and that's again one of the things that we've lost. You look at the union movement today. Well, of course, a lot of the union movement is tied up in the public sector, so they're feeding off the whole government rip-off monetary system. But you look at the union movement in the private sector, and these people have no conception of why the Federal Reserve is actually working against their best interests, or the best interests of at least the union members that they supposedly represent, that the big union operations supposedly represent. But you read the AFL publications in the late 1800s, early 1900s, they understood it very, very, I mean, those are sophisticated articles you'll read in those union newspapers. These people understood perfectly well what money was all about and what it meant to them. So I would say today, if one wanted to have a political movement that would amalgamate the quote unquote toiling masses, as the Marxists like to say, on behalf of a sound economy, limited government, maximum freedom, gold and silver coinage is what we want. And it doesn't have to be coinage, because we're pretty sophisticated now. You can put bars, right? And we can do this all electronically. You can set up systems whereby you're transferring, well, the computers don't care how many zeros after the decimal point, right? 0.000001 troy ounce, right? 1 grain, whatever. We can now do the thing that was impossible to do under the gold coinage system, which is to make small change. Remember when you had the gold and silver coinage system, there were coins only of certain sizes, and that was it. Otherwise, you had the so-called token coinages, the nickels, the pennies. That was the system. And so the prices tended to be a little bit more arbitrary than they should have been, because they had to be expressed in terms of coinage that people could actually get their hands on, could actually use. Today with the electronic systems, you can put a gold bar, a gold $20 gold piece. Let's take $50 gold piece, American Eagle. Right? You got this in deposit in a state depository, and you can use that as the basis for any amount up to an ounce of gold that you want to put out electronically. So the system now, the technology has finally made it possible to use the gold and silver system in the most economically advantageous way. So we have all those things going for us. We have that technology and money. We have the technology in advancing product development, purchasing power, and wages. This is the unique time in world history we can all be put together. And what's happening? The government, the bankers, the big financiers in Wall Street or wherever they're hiding out, they're all against this. Why? Because it's against their economic interest to do this. I mean, in this sense, Marx was right. The big capitalists do not want to share their wealth with the toiling masses. And the only way the toiling masses are ever going to get control of this system is to go back to a sound monetary system that controls two things, the government and the big corporations. Because the big corporations will no longer be able to use the banks to get bailouts and all the rest of these financial manipulations that keep their heads above water when the financial system fails us in one way or another.